Firstly, thanks everyone for joining us today. So before we start, just like to let everyone know that we have an upcoming deal on Leet Capital, which is QMed Health Tech. So they're looking to digitalize the healthcare ecosystem in Malaysia, and they're actually one of the PPV providers for the vaccination centers as well. So up till today, they've generated about close to 10 million ringgit worth of revenue. So if you'd like to learn a bit more about what is it that they do and what they have in their pipeline, do PM myself or Bikesh, and send us your email address, and we'll personally reach out to you. I guess we can schedule a call with the founders of QMed as well. All right, so once again, thanks everyone for joining us today. This is what we're starting this thing called an Angel Investor Insight series, where every month or two we'll try to get a seasoned angel investor to come and speak and share his insights, his experience, what the specific investor looks for in terms of the deals that he would potentially invest in. And so today we have Mr. Suresh Thiru. He's ex-CEO of Seek Asia, which owns the famous job recruitment site that you all know as JobStreet. And our other speaker today is Mr. Vikesh Lakmichan. Don't think I need to intro too much on Vikesh. He's the CEO of Leet Ventures. And so yeah. So a bit about Leet Capital. So we're one of the registered market operator, which is licensed by Securities Commission, or known as RMOs. So there are 10 in Malaysia. Leet Capital is actually the latest one to be licensed. And so the reason why we decided to start an ECF platform is because we have an entire 137 or Leet ecosystem. So we do a lot of early stage investments. We work with corporates. But there was, I guess, a piece missing in the puzzle. There was nothing to help those later stage companies, which is why we started this ECF platform, trying to help these later stage companies, or even these SMEs now we're seeing scale and grow. So I guess before we start today, we have two questions that I think my colleague will put a poll up to ask you guys. So the first one is, do you have prior experience of investing in the equity market, be it public or private? And then the second question is, have you ever invested in an ECF deal before? So I guess we'll give you a minute to just kind of key in your answers. Nice. Okay, almost done. All right, cool. So we've got a very mixed answer. So 50% have actually invested, and 50 people have no experience of investing in at least the equity market. So interesting to see that. But majority of people have not invested in an ECF deal before.
So hopefully we can convince them today to start doing that. Yeah.
Yeah. Hopefully. All right. Thanks for sharing that, everyone. So I guess just a brief introduction, since most of you guys have not invested in ECF deals, it's perfect for me to kind of introduce to you how ECF works. So what ECF does is typically investing in private companies was only accessible to these angel investors, these sophisticated investors, this or even institutional investors, these VCs and private equity firms. But right now with ECF, it's democratizing the fundraising landscape. And so now the average Joe like you and me, the public, anyone can kind of come in and invest in private companies that they like. So how it works is the company will list on an ECF platform. So one of them is Leet Capital. They come on Leet Capital, put their campaign up, and then the public can just choose how much they want to invest in. That's pretty much how it works. But the thing that's really unique about it is that in an ECF, because you've got an influx of, could be anywhere from 100, 200 to even 300 investors. Or as a private limited company, you're only allowed 50 shareholders on the cap table of the company. So what we do in a ECF campaign is that we use a nominee structure. So all the investors, so if you invest in an ECF platform, in an ECF deal on our platform, you would come under our nominee structure. And so the nominee will essentially hold your shares. You still own the shares, but we're just holding the shares on your behalf. So whenever a company decides to disseminate information to its shareholders, we would do it because we would get the information first and then we would disseminate to you. And so that's how it works in an ECF deal typically. All right, and I think that's basically a brief introduction about ECF. I guess I'll talk to you a bit about how to register as an investor. So if you want to keep up to date with some of our deals, all you have to do is go to Leet Capital, click on sign in, click on register account, and then click I want to invest for an investor account. Fill up a bit about your personal details, a bit more about your account details, and here's where it gets I guess really important. You need to select the investor type that you are. So if you are an angel or sophisticated investor, you need to meet the guidelines that are stated over there. And so what we require is that if you do select an angel or sophisticated investor, you have to provide supporting documents which meet this criteria. I know there are a lot of other ECF platforms out there which and it is self-declaratory, but we require yourself to kind of prove this because we want to keep in line with SE's guidelines that they've given us, and these are the general guidelines. If you're just a retail investor, all you have to do is just upload the front and back copies of your IC. So if you choose the other two, you could either send us your payslip, your bank account, or anything to show that that can verify the guidelines given. And that's pretty much it. This is your dashboard. From here, you can see all your investments, etc. And so I guess that's a bit of the introduction to today's session. So I guess I'll pass the mic over to Bikesh to kind of kickstart today's event.
All right, thanks, Jasdeep. Coming up to 11:10, we've got about 50 people in the room, perfect timing. With me this morning, we've got Suresh Thiru from the fame of JobStreet, I think JobsDB, Seek Asia. I mean, you've seen these names, you've engaged with these brands. If you run a company, there's no way you have not posted a listing on their particular site. But let's just get Suresh to tell us a little bit more about his background and his journey coming to here today. Suresh, tell us a little bit more.
Thank you, guys. Thank you, Bikesh and Jasdeep, for the invite to join this meeting this morning. Firstly, I want to apologize. So I'm staying in this house and the neighbors next door are doing some renovation. So if you can hear that drilling sound, my apologies. Seems to be my luck every time. I'm doing a seminar or something like that, the neighbors are doing some work. So real quick introductions. I've been with the JobStreet and then Seek team for 21 years. And I retired from that role in December last year. So I already started up with the JobStreet team here in Malaysia, and then we expanded across the region. You might recall that in 2014, Seek acquired JobStreet. So I stayed on with Seek the first year. Seek merged JobStreet with JobsDB across Southeast Asia and Hong Kong. And I was the CEO. And then for the subsequent 5 years, I was the COO, sorry. And then for the subsequent 5 years, I was the CEO for the group. So running the job business across Southeast Asia and Hong Kong. To me, it was a really fulfilling experience, really appreciated, the privilege working with Mark Chang and his team. So in that sense, I think I've been really lucky. At the end of last year, I retired. Since then, I've been sort of part-timing with startups, essentially doing a little bit of investing and also quite a bit of advisory work. So I work with about half a dozen startups as an advisor.
All right, kind of a lot going there for you to get to this point. Well done. Maybe just kind of tell us a little bit of the first time you ever invested in a company. It doesn't have to be, was it as an angel or did you guys do something else before that? What was the experience like?
Yeah, so, early 2000, I had a friend, a really, really good friend of mine from school. He is based in California. So he and a couple other friends were starting up a company. So obviously I was really excited to be able to invest in his company. So it was a startup in California, and I put some money in there, and I got some other friends here as well to put some money in. So that was my first experience, doing investments. Yeah, so that was in early 2000-ish, I think 2003 or 2004 maybe.
And how did that go?
That didn't go too well at all. So the company developed some really good technology. It had some leading edge, video technology. You might have heard of a company called DVDO. At one time they were sort of the Dolby. If you've heard of Dolby sound, they were sort of the Dolby of video. They came up with their own sort of video standards, and a few companies adopted them. So in the old days, before the time of, like, say, 4K TV, if you wanted enhanced TV or a high resolution TV, you could take their box and connect it between your incoming Astro or incoming TV and your own TV, your TV signals or Astro signals and your TV, and it had algorithms there that it could use to enhance. And also the chipset that they use could basically, stream video signals to any form factor. So, a small handphone, a desktop, a large screen. So it could do all the scaling.
So that's some heavy duty stuff, right? So your background back then, was it something that allowed you to understand this technology, hence you thought it was something you could grasp and then put money into? So how much of it you knew, or how much of it you just left it to chance because it was a friend?
So half and half. So this was a friend that I had from MIT. So obviously, we were basically engineers, hardcore engineers. And I graduated in 88, 89. So those were the days where hardware, reigned. It was just transitioning to software. So I missed the transition to software. So, in my days in school, everybody spent time building hardware, right? So, and this guy was a wizard even at MIT in terms of video and stuff like that. So he and his friends, they worked at Apple. So I know they built some good stuff. And then they left to build this company. So I knew that they had some leading edge stuff, and I trusted them, obviously. So it was some stuff, basic stuff I knew about, and also a lot of trust in sort of their capability and track record. So they had some good stuff. They wanted to become the Dolby of video. They couldn't, I don't know if there are any hardware people here, but, at one time people were designing custom chips. And then after that, people all moved to FPGA. So you could program your algorithms or whatever in FPGA and then plug it in. Okay. Then, the chipsets, the processors became more and more powerful. So you didn't need side processors for graphics and video. So you could see, some of the companies that were building graphics cards and video cards all went out of business because, Intel and the others were building microprocessors that were very powerful. So they were behind in that sense.
Okay. So knowing what you know now and your past track record transitioning from hardware to software, how does that affect how you look for investments today? So is there an investment thesis that you have as an angel investor? Walk us through the process. How do you decide?
I mean, essentially, I've learned the hard way, and I essentially, made enough mistakes, I think, and I continue to make mistakes. So today, when I look at an investment, I essentially look at three things. I look at a team, and I ask myself, is this team passionate? One of the things I like about my friends that I invested in is because I knew they had a mantra that says, "We'll be here till the lights go out." Right. So they are fully 100% committed to that. Right. So, they're not going to quit. They're not going to leave. They're going to fight. They love the technology. You sit down with them for 4 hours. They'll talk to you about algorithms and, how to make that little corner there, on your device, not have any glitter,
Yeah.
So they're committed. So they'll be there till the lights go out, is a phrase I like, which I learned from them. So I like people who are committed. And secondly, I'm looking for a team of people that have got a good purpose, and more so now, maybe not so much earlier. I want to be able to contribute back into the community. So I'm looking for things that have got a social impact, or they have different names for it right now: impact investing, social purpose, whatever you want to call it. And then thirdly, I'm asking myself, is this technology scalable? And can the team scale, right? Yeah.
Okay. So therefore, when someone comes and sends you a pitch deck, what's the process like? Someone sends you a pitch first, and then is that something that convinces you to have a conversation with them? What do you look for in a presentation before you find out that whole sense of team, purpose, scale? Is this stuff they have to explicitly have in a deck for you to call them back?
So if they send me a deck, and I usually, ask for a short deck, and then what I'm trying to find out in the deck is this a product that I'm passionate about? Is this a space that I'm interested in? And if I am, then I say, yeah, let's chat.
So can they convince you if this is a space you don't understand as an angel investor? Would you have that hard no, like, no, I don't understand it, you can't convince me, or they can make a case for it?
I mean, generally, I think all of us can categorize the space, right? It could be fintech, it could be, helping. It's a SaaS that helps companies be more efficient. It could be a solution for hospitals. It could be a healthcare solution. So generally, you can fit into one of those categories, right? So if it fits into a general category that I'm interested in, then I'm keen to meet. There's some categories that I don't like.
What do you don't like?
Well, I mean, I think there was a time when people were selling where drugs were being legalized and they were selling drugs online, right? Not so much in Malaysia, but in Europe and North America, where they legalized the drug trade, and people are saying, "Hey, let's sell marijuana online." I'm like, "Whoa, well,
even
that's
for
a bit
medical reasons."
Yeah, and I'm like, no, not for me, man. So So and then some of the people are doing like multi-level marketing, and the products that they're selling are not really proven. So I'm not so comfortable, So so generally, if it doesn't fall into that small subsection, then I meet up with the team and try to gauge if the team is enthusiastic, is passionate, and can solve the problem.
So you are one of those kind of angel investors that gets quite active with them. Do you like to get your hands involved, advisory?
Yeah. I like to see where I can add value. I mean, sometimes I invest and I don't participate at all. So I make a small investment. So that's usually led by somebody else. Somebody else says, I'm investing here. I think it's good. Suresh, why don't you put some money as well? And then I would just not spend time trying to understand what it is and just go, okay, I trust you. I'll put some money in as well. So
for the aspiring angels on the chat right now, how do you decide how much to put in and how much you should kind of have a cap? How do you balance that?
It's hard. So if I'm going to spend a bit more time with people, usually I put in a bit more money. So I'm putting in anything between 50,000 to 300,000.
Ringgit.
Ringgit. Yeah, of course, ringgit. So into an investment, and it depends on what they need and stuff like that. And sometimes I put a bit more because I think they need a bit more, and if they don't, it's hard for them to grow and survive.
But you as an angel, how do you carve a portion of what you have to say that I'm fine putting this money somewhere and I may not see it ever again? Like, how do you get to that point that you say you can do that?
Yeah, so that's a very important point, right? So so I think my advice to everybody is, look at how much savings you have, or look at how much savings you will have over the next 3 to 5 years or 10 years, right? and ask yourself, how much money do you need to put together, before you retire, right? Because, we need savings to pay for our kids' education. We need savings for our retirement. And that's an important thing, right? So we got to look at that and say, okay, out of $1,000 that I have in savings, for example, right? How much am I going to put in things that are safe, So am I going to put 30% in things that are safe? And things that are safe would be, for example, a bond fund or fixed deposit, right? So if the economic collapses, hopefully those will still be safe, right? And then the second portion I would allocate would be, can I put, 50%, for example, in things that are, are commonly known, for example, a higher risk, right? But commonly known and easily transactable. So these could be shares, for example, shares in good companies. So you can buy and sell shares on the stock market, and of course it goes up and goes down. So there's a risk there. But if the economy does well, generally the shares should hold if you buy a good company. So how much do I put in there, And then a little bit you can put aside for what I would call, higher risk investments that take longer time, right? So a startup could be a higher risk investment, right? Because a startup you could do well, or a startup could go to zero, unfortunately. And many early stage startups can go to zero. And I've put money into companies that unfortunately have gone to zero. So you need to be able to say, I'm going to put aside this money, and if it all goes to zero, I'm still okay. I still can afford to fund my kids' education, and I can still afford to retire. So I have an agreement with my wife that, we can invest so much money in startups, and it is a small portion of our overall savings. And yeah, I keep to that.
Okay, because you can play it kind of de-risking it by going up the stack and saying, I put money into companies who are a little bit more established compared to that early startup. So how do you decide? Is there a valuation cap that you have that kind of limits them in terms of where they are in their stage of development of a startup? So which space do you like to dabble in?
So currently I'm looking at, and again, it's a personal interest. I'm looking at early stage. So
you define early for you?
So early stage should be, valuations at say 3 million or below.
Okay, below 3 million.
Right? So yeah, below 3 million. So that's quite early stage. So it's high risk. For the bigger companies, I'm not trying to invest individually because they will require, a larger amount of money to say even own 1%. So there I'm essentially investing in funds that invest in startups, right? So I could invest in a PE fund or a VC fund, right? So I've invested in a couple of VC funds, and they usually take care of, the later stage companies.
Okay, that's good. So there
a fund has the advantage of, basically, diversifying your risk, right? Because a fund will invest in multiple companies. And sometimes what I do is to reduce my risk as well is I invest with friends. So if I find a good investment, I get 2 or 3 friends together. And so, and if we want to invest 300,000, I don't put all the 300,000 myself. I get 2 or 3 friends, and then we share that. And then friends also sometimes pull me in and say, hey, why don't you put in 50,000, 100,000? So yeah.
Yeah, so I guess the whole concept of ECF, segueing into that is like investing with friends, right? So someone comes with a great business and you have 100 friends that could split the bill with you. I guess that's the notion of ECF.
Yes. So ECF, it just formalizes that informal network, right?
Yeah, correct. So there was one question that came in when people registered. He quoted Warren Buffett. Diversification preserves wealth and concentration builds wealth, right? So how do you use this premise in terms of investing into startups? Do you diversify or do you concentrate and try and build a specific portfolio?
Yeah, so look, I'm 56 years old, so I just recently retired, so my kids are probably older than some of you all, so So at this point in my life, I need to, for a substantial part of my savings, I need to make sure it's safe. So what was the word that Buffett used?
Diversification preserves wealth. Concentration builds wealth.
Yeah. So because of my age and my risk profile today, I'm in preservation mode, right? And my wife keeps reminding me, because she's so much smarter than I am on investing. So she keeps reminding us that we are at the stage where preservation is important, right? Because if we lose money, we don't have enough time to recoup it, right? So for me, preservation is important. Wealth, I have a small portion of my money that I used to build. So I put the focus on there, but it's a small portion, and it's a portion that I feel I can afford to lose, right? So yeah, I'm not as smart as Warren Buffett, and I don't have as much savings as Warren Buffett. So I can't follow his rules, because I'm not so smart in picking the right stock, and yeah, I'm at a different stage in my life. I mean, if you want to know about the history of my investments, if I give you a quick run through, when I first came back to Malaysia, it was the 1991 stock boom. If you remember that, some of you all are old enough to remember that. And everybody was making money. It was a bull run. Everybody was making money. And then after that, there was a stock crash. So people like me made money, and then we lost our money, right? So losing money at that time was quite painful, because I was young, and I thought I was on a good trajectory, and then suddenly I lost money, but I had time to rebuild it, right?
Nice. Right. So just note
so
to
that's
everyone.
An important thing. Yeah. You got to plan your horizon.
Yeah. So for those who just joined us, we're speaking to Suresh Thiru, ex-Seek Asia CEO, and we're talking about angel investing and some of his do's and don'ts and his past track record. So if you have any specific questions, do put it in the chat. So do tell us, what's, from all your new kind of investments you have, what are you excited about? Is there something specific you've put your money into and you're kind of excited about?
There are a couple that I'm excited with. I'm working with a company called Go1. They're actually a fairly large startup out of Australia. They are the world's largest.
They are a unicorn already.
They are a unicorn already, yes. So I haven't invested with them, but I'm advising their Asia expansion. And I'm excited because they are the world's largest learning content aggregators. So what they do is they essentially talk to learning providers around the world, big and small, and aggregate all their content. And then, go to all the learning management systems and tell them, I can connect you to all this content through one single pipe, because I've built a pipe with everybody else. So, just talk to me and I'll connect you to everybody.
Yeah, it's like a Spotify for education. Pretty interesting.
It is like Spotify for education. That's a good way to put it, or a Netflix for education. So all this learning management systems need content. So instead of going and talking to 100 people, they can just talk to Go1. And what Go1 has done is they've negotiated content at very favorable rates, such that they can provide quality content at a very affordable price, right? So I'm excited because, we can deliver content at high quality in a scalable manner at a very reasonable price. So that's exciting.
Very nice. Okay.
I'm working with Scholarships to You. It's a Malaysian company that is aggregating scholarships. So, if you're 16, 17, 18 years old, you're looking for a scholarship, that's the place to go to. They also provide advisory work on how to get a scholarship, how to apply to universities. So I think that's a great purpose. Yeah.
So someone asked, what's your thoughts on cryptocurrency? Would you invest in that? Is that something you've put on? Have you bought Bitcoins? Are you investing into cryptocurrency companies?
So I remember talking to Mark Chang about 10 years ago about crypto. And Mark was always, super smart, super early. And he was trying to explain it to me, and I didn't understand. And so I didn't buy anything because I didn't understand. And also, maybe 10 years ago, I didn't have much money. So I did not buy crypto, and I still haven't bought any crypto. I know some people have made a lot of money on crypto, and hats off to them. But I don't understand, and it feels that the price goes up and goes down. So sometimes, you look at something and you go, this is an opportunity for somebody to make money, but it's not me. So yeah.
Okay. So we have some questions coming into the chat, and it's quite similar to what you spoke about. People want to know, what do you look for in an early stage company? So I'll just iterate back what Suresh said. One was team. I think that's something everyone always agrees, right? Does the team have the skills to pull it off? But you were also mentioning one key aspect, purpose, sort of like the reason why, right? So how do you do that due diligence on companies then coming to you, and how do you find out if that sense of purpose they have is real?
Yeah, so I usually ask them, what is their purpose? Why are they doing this? So a lot of times people say they're doing this because they think there's a lot of business opportunity there, and they want to make a lot of money. And I find that's usually difficult to sustain. I'm looking for somebody who's passionate about the customer, passionate about solving problems for the community. And yeah, so that's a key differentiator to me.
Okay. So there's a question here from Anand. Anand was formerly MD of Endeavor, and now he's on making his own funds. Anand, thanks.
Oh yeah, hi Anand. Yeah, I spoke to you
knows
long time ago. So good to connect.
So his long statement and question here is, having seen the tech boom and bust cycles a few times now, where do you think we are now in this current cycle? What signals do you usually see that mean things might be getting a little frothy?
I mean, it's a very confusing time right now. I think that while people are going through COVID, share prices are going up, so it seems very unfair to me. Like people are going through a difficult time, but if you own shares, your share value is actually going up. To me, it doesn't make sense. So one might speculate that shares may be overpriced, but I'm no expert, so I'm only repeating what I hear. I think that anytime's a good time to run a startup, right? In a down period would be an excellent time to run a startup, because that's when companies are looking to save, they're looking to do things differently. Yeah, and maybe the big competitors are holding back. I know in JobStreet and in Seek, every time we had a downturn, we saw that as a huge opportunity to invest into the business, because competitors might be holding back, and it was a huge opportunity to go after competitors. And we always felt that we came out stronger after a downturn. So, I mean, a downturn should be a great time for startups.
Yeah, that's true. So, since I think the startups in the room are always asking about what do you look for to invest in something, but to the angels in the room, what do you look for to not invest in them? What's the red flags you kind of look forward to? Are these also seem to be the opposite ends to be red flags, or specific red flags?
I mean, the red flag would be if I feel that the reverse of the three things I talked about, right?
Yeah.
If I think that I'm not talking to a great team, right? Or I mean, if I look at a team and I feel that they're not fully committed or they're not getting along well, then I think that's difficult. Or I think that some of them are just working part-time. You can't run a startup part-time. If you want to raise money, you better be committed 100%, so that's one. The reverse of, they don't have a strong purpose. They just people who just want to make a lot of money don't always make great, product people. a product person is passionate about the product and thinking about the product all the time, and leaving sales to somebody else,
Okay.
and that's what I saw in people like Mark Cheng. And Andrew Bassett.
Yeah, I'll come back to Mark Cheng a bit in a sec. There's a question about valuations. I know Mark has some views on that and how you guys see things too. But just in terms of that whole passion, right? Having that sense of purpose, you're coming in because there's a problem, you not so much of an opportunity. So problems are more important. So then in terms of expansions, what do you think of that growth story? Like, is something just in Malaysia enough for you? Is Malaysia market big enough? Or you want to see companies that has aspirations to go regional, if not global, from the get-go?
I would prefer to look at companies that have got regional aspirations, right? Because if you're doing something well here, there's no reason why you can't do it in other countries, right? Especially Southeast Asia. Yeah.
True. Okay. Do you see enough of that these days?
Yeah, I'm seeing enough of that. I mean, in the old days, a lot of companies did well because they had access to licensing that gave them an exclusive position in this country, right? So it was hard for them to move to other countries. Those days are going away.
Okay. So coming back to the angel investing, so how do you make money as an angel investor?
So I haven't made a lot of money as an angel investor, so maybe I'm not the right person to answer this question.
What are you hoping for? Are you hoping to see some kind of IPOs, some kind of trade sale? Do you think then eventually, like a secondary market, someone comes buys it off of you? What's your vision of this?
Yeah, if as an angel investor, I'm taking a long-term horizon. I know that it's an investment that is going to be stuck there, for potentially 5 years, so I need to be patient. I'm hoping that in 5 years, there is an exit, right? Exit can be, as you are well aware, 2 forms, an acquisition or an IPO. So that's one. I haven't had any opportunities where, as an early angel, I've sold in between, occasionally that happens. So in Malaysia, there's no secondary market for private companies yet. Hopefully
so
it will happen.
for ECF, that's on the horizon. So
Okay.
that's something to everyone in the room. So if you invest into an ECF deal, technically it can already be done, right? So there are some deals where we still get a lot of people coming to us saying, the deal that just finished, anybody in the last round wants to get rid of it. And we just had people kind of switch hands in between, willing buyer, willing seller. There's opportunities for that. It's a very manual process. So what Securities Commission is looking at now is kind of formalizing it to become maybe a platform, whether it's shared or not. Right now, each particular operator on their own will have their own means to do that. So that's there already. In terms of a system, you're going to see that more next year. So some ability of secondary market already.
Yeah. Yeah. So secondary market means that I can then, sort of, once I've seen a success with the company, then, cash out and then invest somebody in a new startup.
Yeah. All right. So cool. So there's a lot of questions again still on valuation. So you made it clear just now that you are playing in a space where it's a long hold. You want to stay in 5-6 years into a company. You're trying to get in at the early part where the team is very important. It's about a sense of purpose. You can play the role as a mentor. And so it's like smart money. You can guide them. You can use your networks to help them. So you kind of said 3 million-ish cap, right? So early stage company. But there's been questions about what do you think of the current companies that you see out there raising with kind of exorbitant or very optimistic valuations too? What's your thoughts on those things?
I mean, I'm happy.
Valuation in general.
Yeah. Look, I'm happy for them. It's unprecedented. We don't have a long track history of companies, being able to raise a lot of money, in Series A or pre-Series A. But we're beginning to see some. So I'm happy for them. Generally those companies will raise those high valuations from funds. It's hard for angel investors to make those big bets.
So JobStreet, right? It got quite a, I would say, a kind of a big exit. It's over 1 billion ringgit for sure. It was more than that. What was the story of that valuation from the day it started to? I'm sure you had offers in between. Did you guys say no to some offers and you hold off, kind of paid off? A little bit backstory on that.
I mean, I think the story that everybody knows about JobStreet is that, you know, Mark Chang and his friends started with 60,000 ringgit.
Yeah, we all read that. Yep.
Right. Yeah. So in 95, he started the business with 60,000 ringgit, right?
So do you think a company could do the same? Start with 60,000 now, or they have to start with what do you see people asking for $1 million straight away?
I think they can start, but I think the likelihood is that, you know, they'll probably be able to raise a lot more money a lot sooner, right? So Mark only raised his first round. I mean, he started in 95 with MOL and then 97 with JobStreet, right? And 99, he raised the first round, right? And I came after the first round, right? So really, I think today people are not waiting that long to raise. There's a lot more money. There's, you know, better opportunity to raise money early. So, you know, I don't see many companies going, I'm going to wait 2 years to raise money.
Okay. So there's a question about, so how do you go and look for deals? You know, what's your tactic to go and scout for deals? Do you stay low profile? Because everybody always says like there's angel investors, but no one knows who they are. So here you are putting yourself out there. Is that means that people can go to you directly? How do you look for deals?
So yeah, I'm not actively out there looking for deals, but I run into deals. So people reach out to me, you know. So I talk to I talk to industry people, and industry people, you know, introduce startups to me. So industry people could be people like you, Bikesh, you know.
Yeah, I guess
I'm not super active out there, and I'm not, you know, screening lots and lots of startups, right? But yeah, somehow people connect. LinkedIn seems to be an opportunity for people to connect with me as well.
Nice. So there was another question about biggest risk you've seen personally in your investments.
Biggest risk. I mean, the biggest investment I made as an angel was 500,000 ringgit. So in terms of quantum, that's it. Yeah.
Okay. And how do you protect your investments?
I mean, you know, again, it's the better you are at doing a due diligence, the better you are at sort of, you know, managing your risk. But you know, if you invest in good people and they do their best, you know, then I'm happy. You know, if I invest in somebody and I think they've done their best and you know the business couldn't go further, I'm happy. Right.
Yeah. So based on that, there was a question that came from the crowd about how do the investors, angels especially, protect themselves from over dilution of ownership?
I mean, over dilution could be a good thing or a bad thing, right? If you invested in Grab, you're going to get diluted in a big way, right? But the valuation keeps going up and up. So even though you have a smaller portion, your value keeps going up, right? So I think you want to be focused on growing the business, you know, not what percentage of the business you own. I would rather own a smaller percentage of a bigger business than a bigger percentage of a smaller business. So I think that, you know, as long as the company is growing and the value is growing and people are benefiting, you know, I mean, you know, I'm not concerned about dilution. Yeah. But of course, if the company is stagnant and it's raising more money and you're getting diluted at the same valuation, then essentially, you know, there's something wrong there. Company's not doing so well. So yeah, you're losing money. But that's part of the risk of investing.
Yeah, that's true. So the whole idea of dilution is not necessarily a bad thing, right? If they are raising money because they are growing and expanding, yes, you are shrinking your equity stake, but like you said, the valuation is small. So even though it's down to a fraction, but if you can kind of flip it eventually through an exit or even a secondary market, you're getting more than you put in. So it's not generally a bad thing. But I think where Suresh then is kind of playing in that space is that high risk but high gain, right? So when you get into an earlier company and you put in something kind of substantial like a 300,000 into a very early stage company, you then begin with a bigger chunk rather than going into a series A and putting in 50,000 ringgit, but putting a 50,000 ringgit into an idea. That's where you're going to kind of survive the dilutions, but make sure you put your money into a team that can last 18 months, 24 months, and do that few rounds to grow that value. So I guess that's something angels have to be a little bit more kind of active in the scene. So platforms like ECF, we kind of put deals there. I think where we kind of plug ourselves a little bit. Our background was always being early stage investors. So myself, I play a role of an angel investor. Hence why you would say that, why haven't you seen many deals on Leet Capital? We've had the license for over a year. We've listed a few, funded 3, but I think till date, we've said no to over 150 companies. So we're playing a little bit different role on Leet Capital. Although we are a platform, but we are still evaluating the deals that come on to say that, would I put money into this personally? Would I want angels to put money into this? Do I believe in this company surviving the next 18 months, 24 months, and having that growth and some of the sense of purpose? I think that's something we as a platform trying to have that due diligence additional, above and beyond, you would say, some of us, to put that there. So if you see a deal on our platform, there's a higher scenario, higher ability for them to survive and grow your money rather than just leaving up to you, even though we have a warning statement on the side, buyer beware, investor beware. So we try and play that role to kind of do some additional due diligence. Mm-hmm. So someone asked that question about, sorry, Suresh, go ahead.
I think just to reiterate, right? I mean, a key question you might ask is that, if for example, with JobStreet, we did our exit in 2014 when we sold to Seek. And so we all got a little bit of money. But between 2014 and the end of 2020, did I invest in any startups? And the simple answer to that is no. I invested in 0 startups. And the question is why? And a simple reason for that is that investing in startups it's a very time-consuming process. It takes a long time to look for, find, and come to some agreement with a startup to invest into them. And post that is also takes time to sort of work with and nurture or advise that startup. So I've not had any time to spend on this prior to retiring and sort of quitting my job. So right now I'm sort of full time. I'm not full time, but my time is taken up working with startups, right? And I'm doing it because I'm interested and I want to keep busy, right?
Yep.
Otherwise I'll have
so that leads to the question.
Nothing to do.
There's one question about that, right? So there's 10 more minutes to the end. So why do you like angel investing, and how do you derive joy from this? How do you derive joy from giving people money?
Yeah. So actually what I like doing is I like running large organizations. And that's why I enjoyed working with JobStreet, and then I continued with Seek. So, when I left my job at Seek, I ran a team that was 1,200 big in 7 countries. So I actually enjoyed doing that a lot. And to be honest, I miss doing that. But the reality is that, you want to run a large organization. It's also very taxing and time consuming, so you're spending 60, 80 hours a week, working, and for me, after a while, particularly with the travel, the significant travel, it got to a point where it was difficult, challenging, and I needed to spend more time with my family, which is something that I invested into. So I decided to make that change. So having made that change, then I want to do something that I'm interested in, that I think I have some experience with, and so I'm gravitating towards startups because I think that hopefully I can lend my experience there.
That's nice.
So I enjoy, yeah. So I enjoy seeing startups grow. I like to see things grow and scale. So I'm looking for startups that want to grow and scale, particularly regionally. So those are things I think I enjoy doing, and I can lend my time towards. And I want to put some money in as well with people who I think doing a good thing. So, entrepreneurs can solve problems for the community. So I'm looking for those passionate entrepreneurs who are looking to solve.
Yeah, because there's a big shift right now, right? Everyone's talking about sustainabilities, ESGs, green. So are those areas that you are kind of passionate to look more into, companies that are going down that sustainability route?
Yeah, again, within the areas that I invest in sort of their purpose, I want to make sure that it's doing good things. Yeah.
Yeah.
I'm not only focused on green stuff, but so one of the companies I work with is called EasyBook. And EasyBook is done a good job of providing e-ticketing services to companies and buses and terminals in Malaysia and Singapore that they're growing across the region. So I'm helping them scale. And what they're trying to do is making travel.
Oh, we're losing you.
Particularly for bus and ferry, much safer.
All right, we just lost him for a bit. His home net is.
Am I back?
Yeah.
So in the old days, if you want to take a bus truck, yeah. So where did I lose you all? I'm sorry.
Are you talking about what EasyBook does?
Yeah. So EasyBook is a company that's in the e-ticketing business. So they help bus and ferry operators sell tickets online. And so one of the key purposes is to make bus and ferry travel safer, right? So, in the old days, if you wanted to go from Ipoh to KL, for example, first you'd have to go to the terminal, buy a ticket, and then go back the next day or the week after to travel. So now you can just buy all of that online. So it's much safer. And then as you travel, also they're tracking the travel trip, right? So it makes travel much safer and much more convenient. And that's, people who take buses are essentially the B40 people. And that, not many businesses focus on the B40, right? And they're providing insurance for people who take a bus, right? So so that's as a great purpose. I want to help the B40, right? So a business like EasyBook is focused on B40 travelers. So how can I help them? How can I help 3-4 million people here in Malaysia who travel by bus? Nobody thinks about them, right? So if you go to KLIA, you look at how beautiful it is, and you look at how nice it is. But if you go to a bus terminal, it's chaotic.
Correct.
And what EasyBook is trying to do is trying to get that organized.
So Pris is actually on the call. He's like, hey, thanks for mentioning. He's on the call listening in too. And we also have Karamjit here, who's saying that you may have missed a lot of opportunities investing into some great companies because of your super cautious approach. But I guess that's what an angel is, right? There's no one size fits all. Every angel defines how they want to be an angel to the different kind of portfolios. What would you think about that statement, Suresh?
Yeah, so if you look back at the successful companies and say, yes, I should have invested here, I should have invested there. So there's always something to be regretful of. But those are like I said earlier, maybe not money for me to be made, money for somebody else to be made. I unfortunately also invested in companies that have gone bust. So I'm not very good at picking good companies so far. So I'm working on it.
Yeah, I mean, so when we do this kind of surveys with our investors, we always ask them, what are you looking for? What kind of deals can we help you kind of find? And most of the angels always reply is like, I don't know. Find me good companies, right? Find me things that matter. And no one exactly has that specific shopping list. They will know it when they see it. So hence, events like this is trying to like spread the knowledge of and share how everyone had different tips to find deals and what they kind of identify as a good investment. But even then, I guess it's still that check size, because we've had as Leet a lot of misses that we kind of cry in a corner about. Like the latest one would be Sendit. Sendit's this big fintech from Indonesia that's become a unicorn. And when they came to us quite early, 5-6 years ago, the raise was still substantially high. I mean, I would not write a $500,000 check just like that on my side, right? So we said no to them. But hindsight, you go like, oh man, what if I did that? And same thing goes, we had a crypto one from Philippines. We had the opportunity to get into a Series A, but it was still a bigger round that we would usually write. And we had to say no, because that's not what we do. And then shortly after, they got bought over by Gojek for $72 million. So I guess you don't have to worry about missing the opportunities. There's a lot of opportunities out there, but stay in your means of what you are as an angel, right? Don't go above and beyond trying to chase that. It's not a get rich quick scheme, right?
Yeah. I mean, my advice to a lot of angels is that if you're not full-time and you're not a specialist in the space, then, look to, invest through, other mechanisms, either pool a fund together or invest in a fund, or, look at an ECF, because they pre-filter stuff for you. And then they put information that's easier to acquire and digest, right? So, and an ECF, will, pre-screen, so you get the better companies to look at. And then there's some mechanism for you to qualify a company. And if you like the product and you like the team, then invest through them. If you're trying to, build, source your own startups, it's very tough, very tough. How do you find out? How do you learn early?
Yeah, I mean, it's definitely a journey. So baby steps. And again, to plug ECF, you can start small. I mean, it's a fraction, right? Put in what you're comfortable putting in, learn the ropes, see how these companies work, and then slowly climb up and maybe write bigger checks when you're comfortable. But we don't recommend you just jumping in because you heard that this is a sure thing. Believe us, we've been there long enough to know that there's never something called a sure thing. Things go up and down, especially in this particular region. So coming to a close, 1 more minute left. Suresh, parting remarks to the two advice to the aspiring angel to be. What's your words of wisdom to them for final? And then to the upcoming startups who are trying to get a check from you, what is your parting words to them?
So to angels, I would say that, if you're going to invest in a startup, then, be clear of how much you want to invest in startups, and, keep to that plan and be patient, right? So, if you miss this opportunity, there'll be another one coming along. So, keep your powder dry till you're comfortable. So if you have got X amount of money, figure out, how many companies you want to put that into, whether you want to put that into one company or 3 or 5, whatever. And then, bide your time till you find something that you like, right? And then invest.
And to the startups who are looking to raise?
Yeah, for startups, again, a startup is an exciting journey. So, it's a very, very difficult journey. So, make sure you're resilient, never give up. If you get turned down by 10, look for the 11th. If you're raising money, you just need to find one person. And generally, if you've done round 1, round 2, and you've done well, then after that, everything gets better. And if you look at Kasam, if you look at Grab right now, and I'm sure it's hard for them to raise money, and I don't want to simplify it, but they probably have people calling them now that they're successful, people calling them and saying, hey, can I invest? So it's tough in the early days, but it does get slightly easier.
All right, fantastic. Thank you so much for taking time out of your home quarantine and your broadband connection to spend this 1 hour with us, educating everyone on how you did it and how they can. Truly appreciate that, Suresh.
Yeah.
I will see you soon on some of the investments.
Thank you for having me. And it's not about educating; it's more about sharing. So I'm just trying to share what little I know. Yeah.
Thank you so much for that. So on your screen, you see a little survey link, and this is just for us to get feedback. This is the first of a set of series that we're trying to do around understanding the minds of the different angel investors that, so, me and Suresh, we've invested into startups together, and we've got a few more that we want to do together. So it was only likely to have him as the first guest. There's a few more that we want to do. You're going to meet some other investors that has some amazing stories like Suresh and looking for deals out there. And we're going to bring them through this, hopefully a continuous series. If you think this is worthwhile and you learn something new and it's triggered you to either fundraise from an angel or become an angel yourself, we'd love to hear some feedback. Back to you, Jasdeep, to kind of wrap this up.
Yep, thanks once again, Vikesh and Suresh. I think even for myself, I'm not an angel investor, but definitely just generally as someone who's in the investment industry, definitely learned a lot from this session. I think we can mirror or come to a consensus in what we generally look for in terms of when we evaluate startups or even some of the later stage companies, very similar kind of thinking. So thank you for sharing. Thank you for taking the time today. Once again, the survey link is on your screen. Do send us some feedback in terms of how the session was, what you'd like to see in the future. We are going, as Vikesh mentioned, we are going to get more angels to kind of tap into their minds to kind of see what they look for, because everyone is different. So do send us some feedback over there. And thanks once again for joining today's session, and have a great weekend, everyone.
All right. So if you've done that survey, you may now disconnect. Bye, everyone.
Bye-bye.
Take care, everybody.